Hi everyone, my name is Simon Rishevich from Optimized Accountants, and in this video I'm going to be quite controversial because in my videos I talk about using limited companies to save tax and for asset protection, save inheritance tax as well. There's a bunch of reasons why I say you should use a limited company. So this video is going to go against all I've ever spoken about. Why am I doing it? Because there are so many people that use a limited company, and I do sometimes think they shouldn't be using one at all. So let's go into why I think that's true. If you are looking for any tax calculators in the UK, then feel free to use our free online stuff on our website. So there's a QR code. There is a link in the description box as well. So what is a UK limited company? And it's defined as a UK limited company is a business structure that operates as a separate legal entity from its owners, providing them with limited liability for the company's debts and obligations. It's subject to specific regulatory requirements, including filing annual accounts and a confirmation statement with Companies House, and pays corporate tax on its profits. So pretty straightforward, really. Oh, by the way, if you need some UK, US tax international advice, then feel free to use that QR code and book a call. So why use a limited company? We shouldn't ignore this. So it can save you tax. Now, if you are an individual, you've got some services, you're going over £100,000 or even £40,000 for that matter, you will have potentially a 20% tax bill. You may go up even higher to 40% if you've got other earnings, if you're going to £50,000, £60,000 worth of profits. You've also got national insurance charges and liabilities in regards to a legal side of things remains with you. But a UK limited company can pay less tax. We know that there's a starting band of just 19%. That's not bad. It also gives you legal protection. So as long as you haven't signed contracts that's giving you personal guarantor to say, hey, if something goes wrong with this company, I'll accept full responsibility. As long as you've not signed that, then the UK limited company will shield you from all liabilities. So be careful with the contracts you sign. Third thing is brand. Many people talk to me about brand, and I'm saying, well, you don't really need a limited company. But some people say, hey, if I got a limited company, I feel more confident. It helps me with my brand. So there you are. Many people's perceptions are different to mine. So if you need some advice, there's that QR code again, and the link will be in the description box, as I said before. But the video is all about not using a limited company. So why should you not use a limited company? And there's good reason for that. First of all, reporting requirements. The UK limited company has to file company accounts to Companies House. It has to file a tax return to HMRC. And if you take money out of that UK limited company, you personally now have to file a UK self-assessment tax return as well. So the amount of reporting goes up. In addition to that, you have confirmation statements to file with Companies House to say who the shareholders are, who the directors are, people of significant interest, all that kind of stuff. You have 8-head reports as well if you have residential property. So it's not so straightforward as it is with a UK self-assessment. So if you don't like reporting, maybe a limited company isn't for you. Double taxation. I talk about tax efficiency all day long in all of my other videos, but here I'm going to say to you, well, why? Because you are going to be double taxed. You are going to be taxed at the corporate level. And if you take money out of that limited company, whether it's by wages, interest charges, or dividends, you will pay tax on that as well as an individual. You've got double the amount of reporting, double the amount of taxation. Is it really worth it? So you do need to think about this. If you are going to take all the money out of the limited company, trust me, it is not worth having it. If you are going to reinvest your money in that limited company, fine, do that. If you're going to pay money into your pension for the future, then fine, do that. But if you're going to use a limited company and extract all of the money out of it for your personal use, do not use a limited company. It doesn't save you tax. In fact, you'll be paying more. You'll be paying for an accountant. You'll lose money. Limited access to finance. I mean, look, the limited company is a risk profile on its own. And when you're first starting a limited company, it may not have any sort of reputation. So if you go to a lender and say, hey, could you lend it some money, compared to, hey, can you lend me some money, they could easily do a credit report on you, get all the background. When it's a brand new company, what history do they have? Zero. So actually you could restrict yourself from financing of your business. And finally, you've got public disclosure, Companies House. It's a public record. Now I see a lot of mistakes here whereby people set up a company by themselves, really cheap, and they keep their home address on the record. So now you've just told everyone, hey, this is the company, this is my name, and this is where I live. That's really quite dangerous from a perspective if you've got clients, customers, or disgruntled suppliers. They now know where you live. Not very safe, is it? In addition to that, are you opening yourself up to fraud? If you have just given someone the public record, your name, and your personal home address, that's two pieces of vital information that will help fraudsters defrauding you. So be very careful with this by doing companies on your own. And that's why I always say, book calls with us. We will help you set up the company in the right way if you choose to have one.